Hey everybody, Jason Rivera here from ValueInvestingJourney.com to finish off the case study on Armanino Foods, stock ticker AMNF. The first part of the case study was me showing how I do preliminary analysis on the company, and it showed that they look like a good company to do further evaluation on. The second video, or at the end of the first video, I talked about relative valuations, EBIT, EV to EBIT, EV to free cash flow, and in the last post I explained what those meant and why PE is useless. If you want to see both of those, go to my blog, ValueInvestingJourney.com, to see both of those, the first two parts of the case study. In this video, I will explain earnings yield to finish off talking about what I meant to talk about in the first video. Another thing I didn't explain very well in that video was earnings yield. I brought it up at the end of it, but I didn't explain what it meant or how to calculate it. Alright, so here we go. I don't use PE as an earnings yield or as a relative valuation. I explained why in the previous post on why PE is useless. But I also don't use PE to find earnings yield. For the same reasons as I talked about in the post. It's easy to manipulate. It doesn't bring in cash or debt into the equation, which pretty much all companies have cash and debt. So if you don't know what those are, the PE and the inverse, which is E to P, which is the earnings yield, will be useless. So how do I calculate earnings yield? I use the inverse of EV to EBIT, so EBIT 2 divided by EV and free cash flow divided by EV to find earnings yield. But let me go back first. What does earnings yield mean, and what do I look for in earnings yield? Earnings yield is a way to figure out what you should expect to make on an investment over time or within a year. That's what earnings yield is. It's compared to bond coupons typically, or other investments that you own in your portfolio. It's a great way to check out which company you should expect to earn more on within the next year. So if you're fully invested and one company has an earnings yield of 10 and another company has an earnings yield of 20, that's a good sign that you might want to take a look at selling the company with an earnings yield of 10 to buy the company with an earning yield of 20%, because it means it's more undervalued and you should expect to make 20% in the first year. It's just a rough estimation. It's not an exact science like the rest of investing. It's a lot of art. It's just a way to compare investments. So earnings yield. I typically look for anything over 10% earnings yield. Obviously, the higher the better. Like ROIC, because the higher the number is, the more you should expect to earn in the first year, and it means the more the company is undervalued as well. So the higher the number, the better. And I've heard great investors, I think it was Joel Greenblatt and or Warren Buffett, say that they look for earnings yield 3 to 4 times the current short-term 10-year U.S. Treasury bill. So right now I think that's less than 1% or around 1%. I haven't looked in a while. So by those metrics, they look for anything 3 to 4 times higher than that, so they would be acceptable by their metrics at anything above 5% or so. But like I said, I look for anything over 10% as a starting point. But again, the higher the better. What else? And yes, I know EB or EBIT and free cash flow to EV is not technically an earnings yield because it doesn't have earnings. But like I said, I don't like to use regular net income earnings because they're easy to manipulate. And I like to see what a company earns from operations, and I count those as earnings. Yes, again, I know it's not technically earnings for the people getting their MBA or in business school right now out there, but it's just another way to find earnings yield that I believe and that I've seen Warren Buffett, Joel Greenblatt, and other investors say they rely on as well. And it's worked for me so far in my investing journey, worked for them, obviously. So let me know if you have any questions on earnings yield. Let me know if I need to explain anything better. If you have any questions in the comments, let me know. If you want to see the first 2 parts of this case study on Armanino Foods, stock ticker AMNF, go to my blog, valueinvestingjourney.com. And the next post should be on a continuation, part 2 of the case study going on Armanino Foods, now that I've talked about relative valuations, why PE is useless, and how I calculate and what earnings yield mean. I should be back on track to start the case study back up again. And if you want to get all future content, make sure to subscribe on the blog, and you will also get the case study information earlier than non-subscribers as well. All right, thank you. Bye.